that's why it's really important to have a plan and understand what your goals are.
In fact, my camel out there is suffering right now with a broken back.
So I actually found Pepe when it was only a couple of hours old, and I'm like, oh, this is a funny meme.
Oh my god.
Yo! Who is this DJ?
The old man is swing trading over years at a time. And it's like, that's where the real money is made.
The answer is a permanent loss. With single-sided staking, you don't have to worry about impermanent loss.
Really, at the end of the day, it's just a matter of a macro market. It's just what happens.
If you're aware, if you're disciplined, you can hone that into further financial growth.
Financial freedom, so we can actually live life and not have to be constantly living paycheck to paycheck. I mean, that's the ultimate goal, more or less, right?
Ladies and gentlemen, boys and girls, crypto degenerates, ducks and squirrels, welcome to this here episode number 97 of the DGen Roundtable. This is a fake DRT stream today. We're not actually here. You cannot see us. We do not exist. But we're going to not be talking about Jackson Hole. We're not going to be talking about Ethereum and Bitcoin having new all-time highs. And we're definitely not going to be talking about Senator Cynthia Loomis and some of the stuff that the Winklevoss twins are doing up over there. For those of you guys who have never seen me or my compatriots here before, hello, my name is Will Stevenson. I'm a traveling TV tower climber. I go around the states building TV and radio towers. In my free time, I talk crypto to assholes and degenerates such as yourselves and these wonderful fine members, just kidding, they're assholes too, of the panel. I'm joined tonight by my good co-host. Oh, it says you're a special guest. Hang on, let me fix that. Where does it say? I know I have one of the co-hosts. There we go. Special guest, or my co-host, Mr. Zenith. For those of you guys who don't know Zenith, Zenith is our resident legal and government expert here on the DGen Roundtable. We are also joined by our great value technical analyst, Mr. Agent J. Gentlemen, good to have you with us here tonight. Mr. Zenith, how are you doing, broski? What's new and exciting with you?
I am doing very well. This has been a bit of a busy week, so apologies. Book club was postponed 1 week, largely due to me. My parents came to visit, so hung out with them, played some golf, made some good food. Showed them how to make some homemade pizza. But outside of that, it's been a good week just trying to pay attention to everything going on with the market because there was some movement this week.
There was some pretty cool stuff. We got a new all-time high for Ethereum, a new all-time high for Bitcoin, and a whole lot of nothing everywhere else. Just kidding. There was other stuff that happened. But before we get into that, Agent Jay, how are you doing, broski? What's new and exciting with you?
I'm doing good, fellas. Glad to be back on stream. I'm going to try to start getting back on here a little bit more regularly. But aside from that, it's been a lot of the same things. I might not have been on the Sunday streams as much, but there's a lot of streams going on over at Walk the Block. And then obviously the Telegram streams over at the DGen Roundtable side as well. And just like you and Z, I have been extremely excited to see what has been going on the Ethereum side because I spoke about this on the Telegram the other day. This is the kind of stuff that you like to see during an alt season, right? Where Bitcoin is either consolidating sideways, maybe slightly a little bit lower, and you're finally starting Ethereum. You're finally starting to see Ethereum not just push alongside Bitcoin, but finally start to outpace it in more than one metric, right? Because people usually tend to take a look at the USD valuation of Ethereum and other assets in general when they're evaluating, hey, if this thing is doing good. But we take a look at a whole bunch of other stuff that people might miss. Like, for example, the consistent downtrend of Bitcoin dominance, the consistent uptrend of ETH Bitcoin, the consistent uptrend of Ethereum dominance, the consistent the consistent movers when it comes to the Ethereum beta plays, which we might go over a little bit today, right? Those Ethereum, those things that exist next to Ethereum, right? Things like Aerodrome, things like Aave, right? The staking protocols, Rocket Pool, the things that are fairly doing well, that have a very tight relationship to Ethereum. So when those things start consistently going up and Bitcoin is not really moving as aggressively as it did like early Q1, Q2 this year or 2023 or 2024, that's when you know you're finally starting to see a good alt season run happen. So very happy for the people who pick the good runners, because unfortunately not everybody's winning. Like Will said, a lot of the crypto space is doing good, but there's also a lot that's doing a whole lot of nothing. So yeah, man, it's been good.
Excellent. Well, glad to see that. Glad to see you're doing well. Glad that Zenith is doing well. And the folks at home, we haven't forgot about you guys. It's time for everyone's favorite part of the show. Before we get too far and deep into the weeds, we have to do the folks at home the genuine awesome service of doing chat motherfucking shout outs. It's time to say hello to those of you guys who say hello to us. So, without any further ado, I would like to first and foremost give a shout out to Mr. Moonpilled Rational Optics, who I cannot pull his comment up because it was several days ago, but he he typed in, "Oh, good, I'm not too late," or something along those lines. I can't remember. I closed out of my my other tab that had YouTube pulled up, so to give this stream the most bandwidth possible. But shout out to Moonpilled Rational Optics. He has made the first comment, and I don't know when it was because it was over 24 hours ago, and I can't see the timeline. So good to have you, broski, Mr. Moonpilled Rational Optics. Next up, we've got my good friend, Mr. Slide 180. You guys might know him as Slide 180. I know him as my good buddy Josh from the Marine Corps. Good to see you, broski. Glad that we could have you with us. Cheers to you, good sir. Actually, hang on. It's an empty bottle, but it's not empty. There's still booze in it. So Josh and I, when we went on our maiden voyage of the pirate ship that got me in lots of trouble in the Marine Corps, we were sipping on a 9-liter bottle of Parat Belgian ale, and this stuff is quite good and delicious. And I was getting drunk on it the other day as we were saying goodbye to another one of my homies who's headed off to camp for a couple months. So good to see you, Mr. Josh. Glad that you could join us tonight, and I hope that this brings up some excellent memories of hanging out on a raft before I got NJP'd and busted down from being a sergeant. Next up, though, for chat shoutouts, we've got Mr. Kenturian54X, everyone's favorite pilot, farmer, and dungeon master. He says, "What's up, DGens? What's up with you two? Good to see you, Mr. Kenturian. Welcome to the stream. I hope you are doing some excellent alfalfa farming, or perhaps even flying your plane around all over the place." We've also got another good real life friend of mine, Mr. Moonmutt, who says hello to my DGen friends. Good to see you, Mr. Moonmutt. Glad we could have you with us. I still have your stickers, by the way, in an envelope, and I don't think I've got an address from you, so I'll just hand them to you the next time I see you. But if you wish to DM me on Telegram a good address to send your stickers to, broski, then I would be happy to do that. And Moonpill, if you're watching, I still got yours, and I need to send those out. I'll do that. I will do that tonight or tomorrow. Good to see. We got another sticker gentleman in here, though, Mr. Marcus72, who says, "What up, all? What up to you too, Mr. Marcus72? I hope this round of stickers finally made it to you. I know that you gave me your neighbor's address last time, but I sent out your stickers a while back while I was over in Florida. So glad that we could have you with us tonight. And shout out to Mr. Moondog. Love and light to you too, good sir. He wishes us all love and light. Moondog is an excellent, outstanding person. I think I've met damn near everyone in these. We've got Funkmaster Hex as well. I've not met Funkmaster Hex yet. He says, "Ladies and gentlemen, good evening," and a reminder to hit the damn like button. Absolutely right. Shout out to Funkmaster Hex, the Trailer Park Boys Julian of Hexico. We fucking love to see you, broski. And then we're also joined by Mr. Hexkin Lost in Asia. You're live, bro. I can see you. Let it happen. Is this what the bull market is like? With a little cha-ching money sign. Absolutely. We are live. I hope you can see us because that's kind of the goal here. But it's good that we have you, Mr. Hexkin Lost in Asia, and I hope that you're enjoying the ability for I can't remember what country is it that started accepting like cryptocurrency for turning it into their tours. Is it Thailand or Vietnam or something like that? I remember we were talking about it on one of the streams. Maybe I was talking about it with Brendan, but I know one of them over there allows you to basically take your crypto monies and turn them into the local fiat. So that's pretty cool. It is Thailand. Thank you, Mr. Hexkin Lost in Asia. It is Thailand. So you can turn your Bitcoins and your Ethereums and your whatever crypto they take into bot. So that's pretty fucking cool. Love to see it. And Marcus let us know that he got the stickers. So freaking awesome. And cheers to you too, Mr. Funkmaster Hex. Ladies and gentlemen, though, that concludes chat shoutouts. Mr. J, Mr. Zenith.
All right. Well, I was thinking we were going to start off with a tale of two charts, if you will. But before we get to that, I do want to give a very special shout out to two guys who have done some awesome work this last week. First off, that's going to be Matty Allen, who hosted the annual Pulse Chain conference that went on. It was about a 3-day event. I had the pleasure of speaking on 3 different panels, and I had a great time with some folks over there, including our buddy Nuclear Herbs. So we are getting a little more information regarding that one legal case in South Carolina. So if you, as a Hexkin or a Hex holder, believe that you are not represented by the one hot dog guy who feels like he got screwed out because he bought it 44 cents and sold it too. Well, we'll find a way for you to be able to voice your opinion and let the courts know that, yeah, he does not represent all of us. And hopefully this should help clear up that case and all the stuff going on there. Number two, gentleman that was also doing fantastic work is none other than RH Max, who hosted the Hex Week live conference over there as well. So those guys have been putting out a ton of content. A lot of people came together for everything. So please, if you can, go check out Matty Allen and RH Max for all the recasts of the conferences. There was a lot of good stuff, a lot of familiar faces, a lot of new faces too, which was a lot of fun. But yes, wanted to give those gentlemen a quick shout out before we get into our tale of two charts. So I figured this is a good place to start off the show for us, because it's going to kind of feed into the rest of the articles that we have pulled up for tonight. So with that being said, Mr. Will Stevenson, if you don't mind.
Yes, I got you, dog. Add to stage. Oh, did I clicked the
There we
button,
go.
but I don't see it. Okay, there we go. My computer's lagging, so apologies if on producing end things are laggy. Go ahead, Z.
All good. So first up, we got good old Bitcoin. What has been going on with Bitcoin? Well, we potentially made a new 60-day cycle low there. If you remember, probably about 2-3 weeks ago, we were having a big back and forth about where is the end of the cycle, where does it start, that kind of stuff. And then we had our very large move up to the new Bitcoin all-time high at about $124,000 there. And then since then, we've actually had a bit of a correction, and we came down and we got down to about $110,000, which, as you can see, is just a hair lower than the one we had 2 days ago, and which is also a bit lower than what we thought was initially our 60-day cycle low. So after this spot right here, and we made that new move to all-time highs, that's a good indicator that we're going towards a new cycle. However, we did break down and we made a new all-time, or a new potential cycle low there. So currently, I have my count at 63 days with a day 53 high. So based on that right there, it's possible we could see a little more downside action, but I personally don't think that we're going to see a whole lot more, because what I'm seeing is that we have actually we're trying to flip an old resistance area into a support area. If you remember, back when we had our previous all-time highs back in June and May, those areas were right about 111,000. And now we came down, we almost tested it once here, and then we came down and we've tested it again here. So if we can hold this level, I think it'll build a solid support zone for us to move up from here. But overall, if you look at the moving averages, Bitcoin is actually under the 20 and 50-day moving averages. And as of right now, the 20 and 50-day moving averages have officially crossed, indicating that our short-term momentum is down and our medium indicator is still slightly up. So could be a little market fluctuation, could be something more. Time is the only thing that's going to tell. Outside of that, though, here is our second chart of the day that we're going to look at, and that is none other than Ethereum. We have officially made it. We officially have a new all-time high for Ethereum, folks. That's right. It's about $4,950. And we made it literally within the last 12 hours, which is very cool to see. We had a bit of a pump up there, stayed up there for about an hour before we broke down to the current areas. But this is exciting because if you look at it, we are sitting above our moving averages for Ethereum, which tells you that we're definitely in a bullish scenario for Ethereum on a short, medium, and long-term basis, which is a slightly different answer than Bitcoin. So if we go ahead and pull up our handy-dandy Ethereum to Bitcoin chart, oh wow, that ratio is looking real good. We came off that bottom very nicely, and now we're starting to head back towards that area that we were previously in for the majority of the bull run there in the last cycle, and the majority of the market up until about June of 2024. So, in my opinion, these are all great things to see. Yes, Hexagon lost in Asia. This is what the bull market feels like. So, Jay, what are your thoughts when you see these two? These are two front runners, and they're starting to perform slightly differently. What do you see going on here, and what do you make of all this stuff? Are we actually in that new 60-day cycle, or am I just going crazy again?
No, I think you and I have been pretty aligned with the cycle counts. I know that Charlie and I believe even Bob Lucas have a different cycle count, right? They have that failed cycle count stance that you and I pretty much disagree with, just based on the data. Quite frankly, because I'm not somebody who likes to cherry pick certain macro events or narrative events and let that affect where I place my cycle highs and cycle lows. In this case, it's usually because of a cycle low. And the reason why I do that is because everything should be involved in the analysis, which means I don't cherry pick specific things like the Trump tariff announcements or anything of the sort to affect where I put my cycle low. It seems very cherry picky to me. Now, I'm not saying that's what Bob, Lucas, and Charlie are doing. But if I were to do that, that's exactly how I would see it. And so I am in agreement with you. Cycle low came in just exactly where our support ranges were. Let me go ahead and share my screen real quick here.
Will, can you help us out real quick?
Yeah, let me know if you guys see that.
Yes. Okay. There we go.
You guys see that? Wonderful.
Yes, sir.
Yep.
Okay, so like Zenith said, day 63 of the Lucas cycle, this was the alternate count that we were working with, right? So a lot of people wanted to put the cycle low there, right? And then this was the mid cycle low. Let's see. 1 second. Right, this was the mid cycle low that we were talking about, which would indicate a failed cycle because you had a mid cycle low that took out your prior cycle low. And then you have some analysts clocking in the 60-day cycle and here at day 59. This is what I mean. I do not like using these two cycles in my analysis because that would indicate we have 2 consecutive failed cycles in a row, which I'm not a big fan of. I'm not a big fan of. Just statistically speaking, probability speaking, the chances of you getting a failed cycle low and then 2 consecutive ones are very, very, very slim. So I'd rather take the alternative scenario when possible, and we do have alternative cycle counts. Now, some people might also be inclined to label this as a 42-day cycle with a cycle eye over here on day number 35, I believe this was. Right? Day 22, right? So that would be a left translated cycle, day 42 low, which is well within reasonable areas, but again, very short for a cycle low, as I'm sure that Zenith will confirm. So given all of the different scenarios that we have in play, this one is of the highest probability, right? Right translated cycle, 53-day cycle high, 63-day cycle low, right into our range support. This area should be very familiar for you if you've been keeping up with the streams over at Walk the Block or DGen Roundtable Telegram, because this was our theoretical range that we were looking a bounce off of from if we were going to take our last swing low over here. And that's exactly where we found support, which is great news for the bulls, because we were working with a very tight range. There are 2 scenarios put on your Elliott wave cap on in terms of where the current market is within the 4-year cycle. And that is either we have a finished Elliott wave impulse, 5 of the wave 5, 1, 2, 3, 4, 5 is right here. Your $124,000 all-time high. That's your wave 5 of 5. And now you're looking for the bear market. However, this initial move down here is very uncharacteristic of the start of a negative impulse. Why? Because you have a slow and choppy and a lot of overlap between the price action, right? This range here looks what? It looks sideways and consolidating, which means on a balance of probabilities, probably going to take out the cycle high here, right? The 124.5K at least one more time before things finally start to lose gas. All right. So that's your bearish argument, although it's a low probability scenario at this current moment in time. The other one is we're just looking now for a wave 4 of the contracting diagonal. The reason why I said we were in a very tight range was because of this fib right here, right? The 1-for-1 Fibonacci at 109.2K, comparing the gain of 2 to 4. And in the contracting diagonal, 4 cannot go beyond the 1-for-1 fib when comparing it with 2. Right, so we were in a very tight spot. If this low is to be taken to 109.2K, we're going to have to start considering alternate counts. And the other one is a multi-1-2 scenario, right? You have a 1-2, 1-2, 3, and then you head to like around $160,000, $180,000 Bitcoin. All right, but The TLDR is, even without having to go through all of the detail, what the highest probability scenario is for Bitcoin right now, even if we were to take out, right? Even if we were to wick down here again, which is I'm with Z here. I think the leverage has been taken out. If you've been keeping out with the discussion over at the DGen Roundtable, me and Simon were talking about this earlier in terms of the leverage positions, right? On the CME close on Friday, we closed right at around $117,000. There were a lot of longs left wide open, right? At exactly this, like there was a thick band of 50 to 100x leverages positions right here in this band. And so what do market makers tend to do? They go in there before CME opens and they like to flush those high leverage positions before week opens, right? The rest of the market opens in order to free them up to move as they please. The same thing happened with Ethereum. Ethereum closed just at around all-time highs. Right before making a new all-time highs today, there was a thick band of high leverage positions just sitting above that prior all-time high at like $4,870, right? And so what did we do? We wicked up there to around 4,900, took those out, and then Giga Nuke back. And when I say Giga Nuke, I mean it wasn't really a bad move for Ethereum, right? It wasn't a terrible move for Ethereum. They were able to flush out some of those high leverage positions, right? But we still have a fair chunk sitting at around 4,500 to 4,700. So I wouldn't be surprised if Ethereum made one more lunge down there before we continue on upward, right? But the TLDR is, whether you're looking at Bitcoin or Ethereum, the TLDR is you're looking for at least one more high for Bitcoin, and Ethereum, you're still looking for price discovery to the upside. Now, if we are looking for the contracting diagonal scenario, my main target for Bitcoin is around $142,000, right? It's just by the nature of the contracting diagonal, the magnitude gain of 5 cannot extend beyond 3, and that's your cap, right? $142,000. So anywhere between taking out the current all-time high and anywhere below 142K. Right? The only exception to this rule is if you were to consider the multi-1-2 scenario. But I don't want to go into too much details. All of that detailed analysis can be found over at Walk the Block or at the DGen Roundtable Telegram streams. All right. Aside from that, right, so you have your price targets for Bitcoin. Ethereum is looking very good. And just like me and Z were talking about earlier, let's take a look at ETH dominance, right? ETH dominance is making a climb after double bottoming here. Let's go over to the weekly chart against Bitcoin. Right? Double bottomed here around 7%. I think it actually did make a new. Yeah, I mean, if this is the complete, I don't think this is the complete history of ETH dominance. Let's see. This goes back to 2017. It is not the complete history, right? But we did double bottom here at 7%, and now we are making a run and possibly trying to contend with that bear market trend line, which would cap us out at around 17%, right? That's the number that we're looking to beat. Ideally, punch through it, find that a support, and then continue to the upside, right? The higher ETH dominance goes, the higher the number Ethereum is going to go, even if Bitcoin stayed at around $140,000, all right? Because think about it. If ETH dominance went up to 20% and Bitcoin was around $140,000, right? That's going to put you at around what? Well, I guess I can't do the math right now because I guess that depends on what the altcoin market cap is going to be.
That it
right?
does.
The higher ETH dominance is, the better it is for Ethereum, and the better it is for the rest of the altcoin space. And then take a look at ETH Bitcoin once again, right? You are doing extremely well here. We are above prior resistance here. Benny was asking about this in the chat earlier this week. He was saying, hey, man, ETH dominance looks like it's about to top out. And I told him, Benny, if you're looking for a trade from Ethereum into Bitcoin because you want to ride that train back down, right, might be to the bottom of the range, trade back into Ethereum here and then finally break out of it. That's a good, reasonable move because ETH Bitcoin is looking to be extremely oversold here on the weekly. Right, so look for it to interact with this trend line. Might get rejected there, right at the range point of control. Come back down into the bottom of the range at around 0.35%, so 3.5%. Talking about Ethereum, 3.5% of a Bitcoin. Make the trade from Bitcoin back into Ethereum and then ride the train back up, right? But right now, I think the market wants to move up because if you go back here on Bitcoin, take a look at the RSI here in the daily. right? We haven't had bullish divergence on the RSI on the daily for Bitcoin in quite some time, right? I think the last bullish divergence we had for Bitcoin here on the daily was right here, right? Lower low on price, higher low on the RSI, and we have not had that. Let me just double check here. Low, nope, not there. We haven't had that bullish divergence on the daily chart for Bitcoin until we made the low today, right? You see this lower low in price, very obvious lower low in price, and very obvious higher low on the RSI, which indicates a reversal in momentum. All right. So let's see what the market open brings us tomorrow. But it's my personal opinion that at the very least, right, Ethereum is going to stay healthy, which means probably the rest of the altcoin space is going to be healthy as well, right? So green lights for Ethereum and the rest of the altcoin space.
That's true. I do want to take a moment just to go back to the 60-day cycle stuff. If you've been following us for a while, we've been talking about this nonstop kind of, and it's one of the major things that we look for. You remember we mentioned it, which we were trying to figure out those cycle counts, but now we have what is arguably a more confirmed cycle count. So to me, it kind of raises the question like, okay, did everything in the past not matter? Or are we just kind of using results-based decision-making to justify things in the past? I would say largely everything has been continuous up to this point. We do not have crystal ball technology. What we have are prediction and analytical tools to try to understand what has the possibility of happening into the future.
Yeah.
So that's where we're at. Does it erase everything we've been talking about for the 60-day cycle stuff in the past? No, we were just at a point there where it was very unclear what the ultimate conclusion was going to be, but we had some pretty good guesses about where things were going. This kind of a correction that we had from the all-time highs on Bitcoin, I think was a little unexpected, just in particular the way that we really rocketed up to that new all-time high, and then we've pretty much crashed down since then, with the exception of Friday, which was a very important day for other reasons we'll get to in a bit. So are we throwing out everything from the past? No, absolutely not. Are we saying that other people are full of crap? Absolutely not. We're all trying to wrap our heads around this and figure out what's going on. But when it comes to the stuff that Jay and I have been talking about for the last 60-day cycle count, in particular, the 2 failed cycles in a row, we use a lot of probability-based analysis. And again, like Jay mentioned, the probability of 2 failed cycles back to back is very, very improbable, to the point where you really should be considering looking at the tools that you use and the rules you set up for yourself in order to ensure that you're not just kind of cherry picking what you want to see, and instead you're setting up a system that can either be proven false or true.
Yeah. And also that would mean that Ethereum and Bitcoin cycle counts would be disconnected consecutively. And that's also that usually doesn't happen. So when you stack those variables on top of each other and you're like, okay, X, Y, Z happening together all at once, and they're all low probability scenarios, you should probably find alternatives beforehand. This is also why when we speak about like technical analysis in general, you don't use a singular variable. And the Luke cycles is a time-based, it's a singular variable, and it's a lagging indicator. It's quite literally a lagging indicator. So you have to use that in combination with other factors in order for you to, if you're a trader or you're an investor, you want to have a high probability, low risk trade or entry point for when you are investing or when you're trading. All right. So like you can't use the Lucas cycle is powerful, but it's one tool. You can't, like, one tool cannot be used for everything. Right? It's not a Swiss Army, unfortunately. So
that's true. All right, Will, do you mind bringing up the screen again? This is our segue into one of the main stories of the week. So if you look, there's one particular candle in here that was rather large and was the one that was really the start before we got up to all-time highs. That is Friday, August 22nd. There may have been something important that happened on Friday, and that would be that Jerome Powell actually had a press conference in Jackson Hole, Wyoming, where he kind of does an annual summit with a lot of people, and there's a bit of a press conference at the end of it. This is particularly interesting, though, because the news moved the markets a significant degree. In fact, I want to say that Ethereum was actually one of the big winners of the day, unless you start getting like really low market cap. Ethereum on its own actually went up about 15% on that day. Bitcoin, that's this candle right here, this one only went up about, I want to say it was about 5%. There you go. So Ethereum's really starting to move at this point, and then we also had a lot of other stuff react as well. So if we go over here to Crow token or the Crypto.com token, again Friday, another pretty good move up. If we even go to like meme coins and stuff, Dogecoin had a very good Friday. Maybe some other L1s. Cardano had a very good Friday. But at the same time, though, none of it really matched up to what Ethereum was doing. It was leading the market, which is interesting to see and always fun to see because, again, Ethereum's been lagging this time. So it's cool to see that. With that being said, though, let's go ahead and jump into what exactly happened at Jackson Hole, Wyoming.
Mhm.
So, coming to us from Reuters, I have a bit of a video clip here for you. Please let me know if you are having any issues hearing it.
While the labor market appears to be in balance, it is a curious kind of balance that results from a marked slowing in both the supply of and demand for workers. This unusual situation suggests that downside risks to employment are rising. And if those risks materialize, they can do so quickly. It's also possible, however, that the upward pressure on prices from tariffs could spur a more lasting inflation dynamic. And that is a risk to be assessed and managed. The stability of the unemployment rate and other labor market measures allows us to proceed carefully as we consider changes to our policy stance. Nonetheless, with policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance.
Interesting stuff. So they're talking about shifting policy stance. Will, what do you think that's a reference to, by the way?
We were talking about the one thing that they can do, right?
Yes, sir.
The increasing in the Fed can do one thing, and that is increase or decrease like lending rates.
There you go.
That's it. That's all the Fed can do. They can do one thing: print money, not print money.
Very true. We've been talking about the possibility of the Federal Reserve cutting interest rates for literally like 7-8 months at this point, since the end of 2024 when they were talking about doing 4 rate cuts for 2025. It's been 8 months into 2025. We've had 0 rate cuts. And now we actually have our first definitive piece of evidence showing that Jerome Powell is actually considering lowering interest rates. So this is the news that really moved the market. This speech right here was showing that one, they've decided that the jobs market is actually a higher priority than inflation currently based on things going on. That's going to be everything from the weak jobs report that came out the week prior. And that also goes back to the jobs estimations being revised down for May and June. Additionally, it also goes to the pointing at the unemployment rate, which has largely stayed steady at about 4.2, 4.1%. But notably, it doesn't take into consideration people that have been out of the job market for more than 26 weeks. So if we follow the calendar back to January, we had a good substantial amount of tech layoffs going on at that time. And since then, we have not really had the same amount of job openings that would be required to backfill all those positions. So the unemployment rate, is it stable? Yes. Is it the entire picture? Absolutely not. So like he said in the speech there, they see that both supply and demand for jobs are actually decreasing a little bit there. So those are the points that are showing him that it might be time to pivot, going from a largely inflation-focused policy to looking at maybe jobs employment. Jay, did I miss anything there?
No, not at all, sir, because we know that the Federal Reserve has a dual mandate: stable labor market, and low inflation. Those are their dual mandates. There was a significant focus in the labor market early on. I think it was 2022, right? 2023, they had a very strict focus on the labor market, and then they shifted to the inflation numbers. And so now that the labor market is showing significant signs of weakness, now they're starting to shift their focus, and it might, like Jerome Powell said, lead to them reevaluating their stance on monetary policy. It's very confusing. We spoke about this a little bit last Sunday because the labor market data hasn't exactly been terrible for like consecutive readings. It's not like with CPI where we've had 1, 2, 3 consecutive prints that have been either slightly bearish to super bearish, the ones that we had the last few prints, in particular with the PPI numbers. So you were such a hardliner when it came to the inflation stuff, and you were so about like, hey, we need more data to come in before we make any significant moves. Now, I don't know what else they're looking at when it comes to the labor market stuff. It seems like we do a pretty comprehensive job over here of taking a look at the stuff that they're taking a look at. And you don't have consecutive readings of weakening labor market. You had a really bad revision, but unemployment has stayed really stable also. So this leading up to whatever's going to happen in September has really it certainly has not endeared me to our policymakers, in this case, the Federal Reserve. Right? Because, yeah, I thought you were consistent and then you're not. But if you cut rates, sure, right? Cutting rates or stopping QT or starting QE, all of those things are theoretically good for our bags. Like, you're not going to see me complain about something that's potentially good for my bags. But I still don't like it when people are incongruent with the things that they say. Like, I'm not a big fan of that. But as always, I'm going to give the people over at the Reserve some grace because, like, I don't know them, bro. Like, the only thing we're doing here is speculating.
That's true. It's a tough job over there as well. But you have a really good point there, which is that we kind of have competing demands, both as Americans and crypto holders, which is that we are in the part of the cycle where we want crypto to really run to finish out the 4-year cycle so that we can take some gains and get ready for the bear market to buy back in at the bottom. That's a very common strategy that a lot of us here use. At the same time, though, when it comes to just being a citizen of the country, we hope for a more stable dollar. We hope for a more stable economy. And when it comes to stuff like what the Federal Reserve's doing, we hope for consistency. Again, it's a tough job and they have very limited tools. But at the same time, though, when people are controlling something this important, I think consistency is very fair to ask for. And I think that's very reasonable. So, again, competing demands. We've been talking about the Federal Reserve rate cut to help potentially get out of quantitative tightening, get into quantitative easing, turn on the money printers, assets go higher. Crypto is the most volatile asset, so it will definitely go higher than the rest. But at the same time, though, for the overall country, it does have larger implications. But at least what we have here is we have our first official data point that, yes, Jerome Powell is actually considering rate cuts for pretty much the first time this year, which is exciting to see, from my opinion. Alrighty, I'll tell you what. There's not a whole lot much else on that one. If you want to catch the full 20-minute video, it is up on YouTube. I will admit, Jerome Powell did not do a very great job of clip farming this time. So I got to give a shout out to Reuters there. I think they had the best compilation by far. So check out the Reuters article for the highlights if you want to watch the whole thing. It's pretty good, but just remember, this is some pretty dry, boring stuff. So we try to chew through it so that you don't have to if you don't want to. Not everybody likes watching the press conferences multiple times over to take timestamps like we do. And it's just because we're a little odd, but that's fine. Outside of that, though, I do want to talk about something else, though, which is that going back to the markets a little bit, we're seeing Bitcoin. It's near all-time highs again. It's chopping up very nicely, but Ethereum is starting to run harder. One thing that we have not seen yet, though, is we're still waiting for the altcoins to outpace them. Oh gosh, Will, please don't leave. I have something for you.
I'm noticing that when I have my camera on, sometimes you turn into robot voice. So I'm still here. I'm messing with my own streaming capability. So
okay, I'll tell you what, chat. Yes, chat. Please let me know if I go robot voice on you guys. But yes, sir, I have a screen share here for you.
Okay. Man,
there
you might
we go.
have to take over as producer here, Zenith, if it starts doing crazy things.
All right, we'll tackle that one when we get there if we need to. But as it stands right now, I've pulled up CoinGlass.
Yeah.
Here we have our alt season indicator index. As you can see right now, we're at about 61, which is just above the halfway point there. But we are on a bit of a trend, which is very much up since earlier in the year. We were definitely in Bitcoin season. So what we're seeing is Ethereum start to run. Solana also got over $200 there temporarily as well. And we're starting to see altcoins pick up some pace, but they're not outpacing. If we get to the outpacing, that's your full-on altcoin season. So I just wanted to highlight this because I think that the trends are showing that they're going in a certain direction. With the Federal Reserve cutting rates in the near future, I believe that is another indicator of potential more upside for the crypto market. And at this point, Bitcoin's pretty much getting close to that top. Ethereum's getting ready to hopefully at least do a 2x, so it's not a terrible market for Ethereum. But when that also happens, it means it's time for everything else to run as well once we get later in the cycle. And I think this is another indicator that we're getting towards that point. Jay, what do you think? Am I putting too much hope on this one?
No, not at all. I think I think that's exactly what everybody wants to happen. And here's the thing, and Ben Cohen really hammered this home. You guys, if you guys know Ben, you already know that he's a very big fan of Bitcoin dominance. The pitch is, if you're not outpacing Bitcoin, why are you in anything else besides Bitcoin? And then and then when Ben finally flipped bullish on Ethereum, he was like, if you're not outpacing Ethereum, why are you in anything else besides Ethereum? Because when we finally made the rotation from Bitcoin into Ethereum, if you take a look at total 3, if you take a look at Ethereum divided by total 3, you're going to notice that chart is down. Instead of me just talking, let's actually pull it up. I'm going to share my screen real quick. So you guys already know what the ETH Bitcoin chart looks like. You already know what Bitcoin divided by total 2 looks like, right? That's Bitcoin divided by the rest of the altcoin space. So let's go ahead and take a look at what's going on between ETH divided by total 3. So ETH divided by total 3. Boom. And I should have squigglies on here.
Ooh.
Do I? I do not.
Womp womp.
All right, so you can see here. Is this the right chart? Total 3.
I thought it was correct. Although that kind of just looks like the ETH ratio chart, to be honest.
Let's see. I think might have done that. There we go. Okay, there's the correct chart.
Excellent.
All right. Okay. So this basically represents how the rest of the altcoin space is doing as it relates to Ethereum, right? So when you isn't it very obvious to where you can see here where this chart topped, right? Right when Donald Trump told everybody to buy stocks, that was the very bottom of like our last deep Bitcoin correction, right? April 21st, 2025. And you can see here that from that point, what has the rest of the altcoin space done against Ethereum?
The answer is not much.
Right. So from that tweet, the altcoin space is still, did it come down even lower? Did it come down even lower than 25%? 55%? Nope. So the rest of the altcoin space has bled minus 55.43% against Ethereum since that Donald Trump tweet. And it looks like it might want to make a lunge down towards here, towards the range lows. So that's looking like probably another, right? If you were to bleed all the way down to the range lows, you're looking at about a minus 61.57% for the rest of the altcoin space against Ethereum. So this is to kind of give you a visual of, if you're not outpacing Ethereum, why are you in the asset? Just like if you weren't outpacing Bitcoin, why are you in the asset? I made this point the other day because people like to bring up that flowchart of capital about how like Bitcoin, Ethereum, right? It's like large caps, mid caps, low caps, small caps, micro caps. People love to plaster that damn chart all over crypto Twitter. But how many people do you think follow it? Right? It's like they didn't follow it when they should have been in Bitcoin. They're not following it when they should be in Ethereum. Like they love to plaster that, but they're like, about how much Bitcoin do you own? 0. How much Ethereum do you own? 0. How much of shitcoin number 5,295 do you own? Oh yeah, that's my entire portfolio. It's like, it's very, again, right? Actions versus words.
Very true. Tell you what, though, the chart that you've pulled up there, I think it's important to kind of dissect it a little bit. So what we had there was pretty much total 3, which is everything that is not Bitcoin and Ethereum, divided by the price of Ethereum. So this is a kind of like a 2-variable chart that we're looking at here, or many, many variables if you want to break down all the different altcoins. What we're looking at there is that there's 2 things that can really affect that chart. One is the price of Ethereum. The other one is the price of the rest of the market. So there's 2 ways that can go, or rather 4, I guess. So if Ethereum goes up, it means that it's going to outperform everything else. If Ethereum goes down and everything else remains similar, it means it's going to look like everything else is outperforming Ethereum. If the rest of the altcoin market goes up, then it means that ratio is going to go up, showing that it's doing better than Ethereum. And conversely, if it goes down, it's going to show that it's doing worse than Ethereum, showing that Ethereum is the better asset there. So you got to look at it from both sides there, which is that what did we see over pretty much the last 6 months? Well, we kind of saw Ethereum kind of crap the bed a little bit when it really got squeezed by all those shorts going on, and we went all the way down to sub 2,000 Ethereum before going all the way back up to the new all-time highs. So just from the Ethereum side, it has been a very, very, very up and down kind of cycle. From the altcoin standpoint, what we largely have seen is that altcoins have kind of chopped to gone down slightly. So it's not that altcoins have been performing so terribly. I personally think that this is more of a case of what is Ethereum doing compared to the rest of the market, and it's been moving somewhat independently of everything else going on. But to get back to your question, if Ethereum is outperforming everything else, why are you in everything else? If everything else is outperforming Ethereum, why are you there? Well, I think there's 2 answers there. Number one is A, you're either bad at your job, which I hope that we're not. But the other one is you could be trying to front run things. So with the current trajectory of that chart going very down to that bottom low, it's showing that it might be getting ready for a trend reversal. So again, it depends on what your strategy is. Like, please build your own strategy. Just don't rely on random people on the internet, because we see a lot of things and we think about a lot of things that you probably don't even consider. That's totally fine. And vice versa, by the way. You can have a totally different strategy than us. So if you're trying to front run something, understand there is potentially more downside to come. Might not even be the end of it. If you want to go for the opposite strategy, which is you want confirmation of something, understand you're going to miss out a little bit on the X's, because you have to confirm that it's going up before you can hit that entry position. So when we're looking at this one, this largely is a chart to determine when altcoin season is happening. Chart right now says altcoin season is not happening yet, but it could be getting close.
Well, it's happening for Ethereum, because is king alt, right? But the saving grace for that chart is it is on the very oversold, both on the daily and I think there's bullish divergence on the daily there, and then it's extremely oversold on the weekly chart as well. So that chart looks to be finding a bottom, which would coincide with the range lows potentially getting down to that 60%, like minus 60%. I know that's not what everybody wants to hear, but there it is. And then obviously there's also that seasonality of markets, right? If like August looks like it wants to close red, can we just please have a green August? Like, okay, we have one green August, please, through this 4-year cycle, just one. And then September during the post-halving year tends to close red as well. So those would coincide, right? If there's a significant rotation back into Bitcoin or Ethereum from the rest of the altcoin space, that chart is going to bottom out at the range lows. Seasonality of markets tends to tell us that like September is red, even if it's red for Bitcoin, it doesn't mean that it's red for like the ratio. So it would actually coincide with a lot of these variables that we're factoring. And like also consider that chart includes stables. If you took out stables like USDC and Tether from total 3, actually you do.
Is it automatic?
No, you don't. It doesn't. It doesn't. You have to do more calculations. There are some charts that take out. So it's like you have to do total 3 divided by Ethereum minus stables, et cetera, et cetera. It's like you have to do the math equation when you're putting it on TradingView. I was like, I don't want to do that. But you can actually do it, right? So that chart reflects the trend when you include stable coins. If you took out stable coins, because stable coins, especially Tether and Circle, they have large market caps. They're in the top 10 by market cap. That chart is probably going to look a lot more harsh too.
I believe it. All right, tell you what, I want to tie this a little bit full circle for everything we've been talking about. So started off with 60-day cycles. Then we went to the analysis of the charts for Bitcoin and Ethereum. Then we talked about Jerome Powell signaling the Fed shift. And now we're talking about potential altcoin seasons. So let's talk about timeline. The next big macro event we're going to have September 15th. That is the next Federal Reserve meeting that's going to be coming out. We will have some other indicators and data coming out between now and then. which will be very interesting to see. And it's either going to confirm or it's going to muddy the waters about that Federal Reserve decision. After that, we are this is crazy. We've been waiting for this one. We are actually at the end of September, early October, coming up to the potential 4-year cycle high if you measure top to top and you go off the 3-year and 11-month strategy that I go for. So Federal Reserve, potential cycle top, and then after that, we have a lot of other things, such as end of October, we have another Federal Reserve meeting. So the last quarter this year, I personally think is going to be pretty action-packed with a lot of stuff going on. We also have a bunch of ETFs that are still waiting for approval. Last week, we just got news that a bunch of them actually got delayed for their authorization or denial. That being said, there's a lot of stuff coming down the pike. So the critical dates are pretty much 2 Fed rate decisions, mid-September, end of October, and we're actually starting to hunt for that cycle high, whether it's going to be that 3 years and 11 months, or we actually start to see the materialization of that bit of a right translated or extended cycle measuring top to top. Remember, I'm talking top to top here, not bottom to bottom. Measuring 4-year cycle bottom to bottom has been very accurate, I will say.
Yep.
So with that being said, let's get back to the Fed. They have a few choices here. 1, do nothing. 2, cut a quarter point. Or 3, cut more than a quarter point. This one actually jogged my mind a little bit today when I was talking with some family friends of mine who are actually in the real estate space and are loan officers. What we saw on Friday was the announcement that Jerome Powell is looking to change policy stance. We saw a big move by the market. This could indicate that such a maybe a minimal move from the Fed is actually already priced into the market. So if Jerome Powell comes out mid-September and says quarter point cut, smallest we can do, but it is a cut, that might be attention today. Really looking to shift things and get them a half point or higher cut to the Federal Reserve rate. Trump has gone on record saying the crazy things like we need a 3% cut instead of a quarter point cut. I personally think that's not really in the realm of possibility, but it does raise the question, how much of a cut could we potentially be getting? If you remember, back in late 2024 or mid 2024, I believe, Jerome Powell did do a cut. We were expecting maybe 1 or 2 quarter point cuts, but instead, he actually just cut a half point. So there is a track record for this kind of thing to happen. So Jay, my question for you here is a quarter point already priced into the market? And would something larger than that have an actual shock to the market? What do you think?
I think the magnitude of movements from the market, if we were to get larger than a 25-point cut, obviously is going to be exacerbated to the degree of which I don't know. But for now, the consensus is 25 points.
I'm right there with you on that one.
Yeah. I don't know. I don't know because we're still quite a ways from that meeting. You said 15th, right?
15th,
September?
yes, sir.
Yeah. So we got core PCE coming out the 29th of August. We got PPI numbers month over month. So we got so we're probably going to get more PPI. Gosh. All leading up to the 15th. We have PPI coming out again on the 10th. Thursday, core and headline inflation comes out. And let's take a look at when the labor market stuff comes out as well. So the 3rd of September, we got labor market data. We got unemployment rate the 5th and then non-farm on the 5th. So quite literally the week before Fed meeting is when all the labor market and inflation data comes out again. So it's going to be a wild last week of August to first 2 week of September. It's going to be wild.
This kind of goes back to the idea that it's easy to look at the cycles of the past and be like, oh, yes, number goes up. How could we not see that? But when you're actually in it, boy, is it rocky.
Yeah, it really is. Which is why, we don't bake anything into the cake and we don't assume anything that's going to come out of the oven until you actually take it out of the oven.
That's true. That's very true.
That cake might suck.
Yeah. If we had tried to do that for this entire bull market or this last 4-year cycle, we would have been very wrong in a lot of different places.
Except August. Except August. August has sucked. August has closed red every single, and it looks like it wants to close red again, bro. Can I have a good birthday month?
Jeez.
I want to see this. Where did we start the month for Bitcoin? We started 115,000 pretty much. Right now we're sitting at 112. So it's close.
Yeah,
We
it's
got
close.
what, 7 days left? So
Yeah.
we'll see where it goes.
Yeah.
It's possible. It's possible. But right now, yes, we are in the red.
Mm-hmm.
All right. Tell you what. Anything else on this topic before we start shifting to some other stuff?
Nah, let's move on to other stuff.
Fair enough. All right, Mr. Will Stevenson. It is time to talk some good people out there.
Yes. Oh, excellent. I think I'm going to have to cut my camera off because I'm noticing that I don't know if you guys can hear me as I'm speaking, but you guys are frozen on my screen, and the chat comes in like fun little waves where it goes big and it goes little. But ladies and gentlemen, boys and girls, it's time for chat motherfucking shoutouts. Before I get into chat shoutouts, can I get some sort of audio recognition from somebody?
We got you,
let me know
bro.
Yes,
that
you're
I'm-
good,
that
sir.
I'm actually live here, not just talking to myself. All right, sweet. So, first and foremost, for the chat shoutouts, we've got Mr. Moonpilled Rational Optics, who says, "Wait, forgot about me." No, we didn't, good sir. You were the first one that we brought up for chat shoutouts tonight. I couldn't actually pull up the chat because it was from so long ago that like StreamYard doesn't allow me to access it, but I can see it on YouTube, so I know that it's there. So glad that we can have you with us tonight, Mr. Moonpilled Rational Optics. Next up, we've got Miss Amber Simon. Miss Amber Simon says hello. Hello to you too, Miss Amber Simon. Glad to have you with us tonight on the stream. Hope you're doing well. We've also got Mr. New to God Plankton, but when Miata? I have no idea when we're getting the Miata, broski, but hopefully sometime soon. It's good to see you, God Plankton. It's been a while since we've seen you in the chat, so glad that you could join us tonight. Everyone likes the plankton, so shout out to you, broski. We've also got Mr. RH Max himself, When Moon Dev, When Moon, also asking about the green Lambos. I don't know when the moon's going to be, but when people start buying, then the price starts going up. And when the price starts going up, then it hits the moon. And that's where we're going. So it's good to see RH Max. Thank you for putting on the Hex Week. I haven't had a chance to catch all the streams that you've been doing, but I'm sure that it's awesome and fantastic. And shout out to everybody that was able to make it over there and do those streams and help support Hex Week. So glad to have you with us too, Mr. RH Max. Shout out to you. Next up, we've got Mr. Mix, aka Jzole, who says, "Really?" And I believe that this is in reference to the just wanting the pump-mental green Lambos. So, yep. I suppose people want pump-mental green Lambos. Folks can have whatever they want. If I had to pick a car to get after the bull market, I would want to get a diesel smart car, and I would want to put like Road Warrior, Mad Max spikes all over the outside and make it just ridiculous and post-apocalyptic. That's what I would do. And then we've also been joined by Mr. Just Live. So it's good to see you, Mr. Just Live. I have clicked on it. There we go. Now it is pulled up on my screen. Welcome, Mr. Just Live. Glad we could have you. We've also got a question from Mr. Kenturian54X, and he asks, Zenith, did you learn anything new or exciting during Hex Week? Any segments that you recommend?
I will admit I did not have a chance to catch as many of those as I would like to, but the Hex Week stuff, there's a lot of good stuff. If you wanted to catch RG3, he was on the Hex Week, not the Pulse Chain Conference. So he was on that one, I want to say Thursday and Friday. And as far as a really cool segment I saw, Matty Allen had a chance to actually get a honest to goodness billionaire on the conference. I can't remember his name right now. I'll go find it and I'll tweet it out later at you. But there was that one. And then honestly,
that was on Maddie's Pulse Chain Conference.
Yes, Pulse Chain Conference.
Thank you. Hex Week, right?
Yes. And then for Hex Week, honestly, I think Max is probably the best one to ask about that one. I unfortunately was unable to join Hex Week because my primary computer is down, which is why we're on the Pakistan call center headset today, because we ran out of USB ports on the laptop. So yeah, apologies. The normal mic is sitting right there, but it's not plugged in anything because I can't plug it in anywhere. But yeah, Hex Week was, I heard nothing but good things about it. So definitely check it out. As far as a particular segment, I'm sorry, I'm drawing a blank on this one.
Well, there you go, Mr. RH Max. If you're still in the chats, if there's a segment that stands out to you, good sir, let us know. And Kenturian, you really can't go wrong listening to the whole thing. So that is on my priority list. That's probably what I'm going to be doing yet tomorrow, as I'm roaming around the Jam Ranch over here, mowing lawns and things. So That's likely what I will be doing. So there you go, broski. Fucking check it out. It's all good. I'm willing to bet. High quality content.
Oh yeah.
But yeah, that
Nothing-
takes care
nothing
of chat. Shout outs, Mr. Z. What you got next for us in the news realm?
Oh well, tell you what, I do want to finish up some Ethereum stuff just because we got the data pulled up, so can't go away from. Do you have people update out there? We'll get a screen share for you when you're ready. Excellent.
Yep. I can see Jay walking, but I just like can't hear you sometimes, and so it's like it's the weirdest thing. But yeah, there you go, broski.
We'll keep it going. Alrighty, just an update on stuff we've been following for a while there. When it comes to, I keep track of this because I think this is the current arms race, and I think the data proves as much as well. Which is that, well, the whales are continuing to splash. Bitmine has upped their total percentage to 1.26% of the total supply. They made another $7 billion purchase today, and Sharpling Gaming also made a $700 million purchase for Ethereum. The arms race on Ethereum is still going on. Definitely keep tabs on that one. And when it comes to everything else going on over there, yes, we talked about this, but we didn't quite show the stats. Bit of liquidations as well going on when it comes to Bitcoin in particular, and Ethereum's getting in there a bit as well. But we got a lot of stuff going on over there. As far as the next news segment I do want to talk to you guys about is we actually have some interesting develops in the political world. So you might remember these two fellows, the Winklevoss twins, you know, the Facebook guys. They had the movie about them. Well, it was about the other guys and how they kind of got screwed. But we do have an announcement that the Winklevoss twins pumped $21 million into a new crypto super PAC. For the folks that might not remember, a super PAC is pretty much a political action committee, which is what is largely referred to as kind of the dark money in politics. What it is it's groups that help fund candidates when it comes to re-elections and whatnot. And yes, we are actually starting to get towards re-election season coming up in 2026. I know it's crazy to think that Trump hasn't even been in the White House for a year yet, but we're already talking about the next election cycle. That's just the pace at which things move here. But let's get into it. The Digital Freedom Fund PAC is at least the third super PAC aimed at supporting pro-crypto candidates. Oh gosh, thank you Politico for this terrible headline here. Crypto billionaires Tyler and Cameron Winklevoss said Wednesday they are pouring $21 million into a new group aimed at supporting conservative candidates who are friendly towards the digital asset industry, creating a new source of crypto campaign cash that is poised to shake up the 2026 midterms. The new group the twins are funding, the Digital Freedom Fund PAC, is at least the third super PAC aimed at supporting pro-crypto candidates, unlike the largest crypto super PAC, a deep-pocketed group known as Fair Shake that backs industry-friendly candidates in both parties. The Winklevoss-backed efforts appear aimed at supporting only Republican candidates. This group will identify and support champions of President Trump's crypto agenda in primary races and the midterm elections. He added that if the Republicans lose their majorities in Congress, Democrats will have power to slow down and interfere with President Donald Trump's agenda. Winklevoss twins donated to Fair Shake during the 2024 cycle, so the new group represents a major break from their efforts. The new super PAC registered with the Federal Elections Commission this month, but has not yet had to disclose its donors, so it's unclear if others have contributed. Fair Shake has more than $140 million in the bank, and these guys just put in 20 to a potential rival there. All right, so why are we talking about this? The reason we're bringing it up is it's more people that are looking to actually support crypto through legislative efforts. We're coming up to the 2026 cycle, so it's not presidential, but it is going to be House and Senate. These are very important because typically what happens after a presidential cycle is that there's a bit of a swing when it comes to the seats in Congress, which is that it usually slightly goes against the president's coalition, whoever it is. So with that being said, currently the Republicans hold the presidency, the House, and the Senate, meaning that they have pretty easy effort when it comes to getting legislation through, even though they haven't done a whole lot with it, which is neither here nor there. But it also allows them to control other efforts going on within committees that do investigations, regulatory oversight, that kind of stuff. So as it stands right now, this is what we were talking about earlier on in 2025 and late 2024, which is that realistically, you have got about a year to really get things through. Last I checked, it's August, so we're more than halfway through the year at this point, and it means that like the article we're going to cover after this one, time's kind of ticking before Congress gets a little focused on getting reelected instead of passing legislation. But what we are seeing here is another data point showing that crypto is actually becoming an issue large enough for the average American to the point that it should be funding some of the candidates that they will have the ability to vote on in primaries and in the general election. So, gentlemen, do you think I'm overhyping this one, or do you think that this is a continued trend that we've seen and it's only an acceleration?
I personally think that is only going to become more pronounced. Donald Trump and the Conservative Party in general have basically solidified themselves as the very pro-crypto party. Now, I'm not trying to take away anything from, or I'm not going to try to take away too much from our friends over on the left, because there are a lot of staunch crypto supporters over on the left. Crypto is one of those things that seem to be fairly bipartisan across both aisles. However, the Republican Party pretty much dominates that, right? They're the ones who make it to the news all the time, talking about crypto, shaking hands, kissing babies, creating these kinds of super PACs for crypto. And I think that trend is only going to increase unless something substantially happens over on the leadership side of the left, right? They get a guy or gal up there who's very pro-crypto. That might change because, as we've seen with Trump, Trump is very forward-facing when it comes to crypto. His family, Don Jr., Eric, Barron, like the degen of the group, is very forward-facing when it comes to crypto. World Liberty Financial is going to have their token available for trading, I think sometime in September. So your boy's gonna get on that for sure. It's like kind of it's like an easy play, right? It's an easy play. I'm proud. Let's not get into the details of World Liberty Financial, but the point is, I think the crypto bros are here to stay. And the larger this industry grows, the more money they're going to be able to funnel into, right? It's like basically we're lobbying. That's what we're doing. We're lobbying to get the candidates and the policies that we want up there in the Oval Office. That's exactly what we're doing. Like, let's call a spade. And this is only going to become more pronounced as this industry grows, especially here in the West, when crypto is becoming a lot more not just used, right? But we have a regulatory landscape that's very friendly to it now. So the better that becomes, the more adoption happens, the more money is going to be able to be funneled from these crypto bros into the candidates and the policies they're going to be lobbying for. And they just happen to fall right in line with a lot of stuff that's happening on the right. So it's not surprising. And 21 million.
There you go. I don't want to try to get too deep in the political weeds on this one, but the trends that we've been seeing is that under the Biden administration and the Democratic caucus, it's largely focused on kind of like established financial industries, and crypto is not one of them. So whether it was Gary Gensler running the SEC or Congress itself holding hearings trying to kind of scapegoat crypto a little bit as a lot of illegal activity, but more importantly, what it was doing was really trying to bolster traditional finance and already established banking industry that's out there. What we've been seeing from the Republican side of the aisle, we don't even agree with everything they do. In fact, we think they've probably been a little too slow on it. But what we're seeing is a willingness to engage with this industry and try to utilize it as best as possible. Theoretically, you try not to have the people running regulatory agencies as partisan people, but the reality is that the party in power will choose people that largely agree with them, meaning that they're probably cut from the same cloth. So that's where we see people like Scott Bessent and Paul Atkins and the rest of the gang over there in the financial side of the house. I personally am happy to see that crypto is getting what I believe is a fairer shake with everything going on, and at least it's a lot less persecution. So when it comes to the existing administration, yeah, we've seen a lot of good crypto things. What we're seeing out of this article, hopefully, is that there's even more money and more interest going into organizations of people that understand how to play the political game. This is a deep and complicated process, and it is long and drawn out too, even though it happens every 2 years, which feels like an oxymoron, but whatever. The point is that we can all shout on the internet as much as we want. It will generate some groundswell, which is good. But when it comes to actually getting people in the places that you need to make things happen, unfortunately, the way the game is played right now, this is the kind of stuff you need for it. I don't necessarily agree with how the super PAC structure works, especially that's how you get a good bit of dark money in there, and you get a lot of shenanigans as well. But if we're trying to play the game that exists as it does today, this is how the game is played. This is another kind of bit of a juggernaut in the crypto space, trying to put some of their weight into the fight when it comes to crypto and politics. So overall, I'm excited to see what goes on with this. I hopefully we can get some good candidates that truly understand crypto in the near future, because as we've seen from a lot of hearings in the past, they don't entirely understand what exactly is going on with them bitcoins and stuff like that. So it will be nice to hopefully get some fresh blood in there that understand the crypto industry and how to work with the crypto industry instead of just try to shoehorn it into the old legislation that's previously existed.
Yeah. And the great thing about this is that the crypto bros are very front facing with their intentions. So it's like, hey, we want you to do this for the rest of the crypto bros. Whoever's willing to do it is where we're going to throw our money behind. There's no very secret backdoor deals that go on, or I'm sure there's some of those going on, but it's very clear what we're lobbying for. Right? And so it makes us a very easy target for the politicians to be like, okay, like they want X, we can give them X. It's easy to give them X. We'll take your money and we'll try to give you X if we get elected. Right? So it makes it very easy for them. Another positive is that even if, let's say, we get another left-leaning president, we have enough crypto bros on the left side of the aisle where it's not going to make it that much more it's going to increase the barrier to not the barrier to entry, but it's going to put some barriers, but not to the degree that we saw back in 2022, because we have enough allies, we have enough comrades right over in the left side of the aisle that'll help us get this legislation through regardless, especially in Congress, right? Congress leans very they're very pro crypto, right? Senate, they're warming up to it, but in Congress, especially where a lot of the laws start, they lean very pro crypto. So at least we can be confident that unless there's a significant shift in the people that are in Congress right now, right? But if those people stay the same for a very long time, like with Nancy Pelosi, she's been there for a while, right? Unless we get a lot of new candidates elected into Congress, if that makeup doesn't change significantly, even if the presidency changes from right to left, then at the very least we can be confident that crypto is going to be fairly smooth sailing even after Trump's term is over.
Agreed. The point that we're trying to drive home here, I think, is that crypto is not a right or left kind of issue. What we're seeing is that the right and left parties are adjusting to the crypto issue itself, which is that, as we saw in the early report that came out this year, it's something like 20% of Americans actually own crypto in some way, shape, or form, meaning that the people that care about these things, the number of those people is rising. And what we're seeing in regards to that is that we're seeing the political parties adjust to meet the demands of the constituents. I think it's very fair to point out that the crypto folks do have a bit of a libertarian bent, which definitely goes more right than left. So that kind of ideology was there in the very beginning when it comes to Bitcoin, such as peer-to-peer cash with anonymous transactions, no borders, no barriers, that kind of stuff. At the same time, though, we've definitely seen the evolution of the crypto mindset to encompass a lot more people than that original tight core group of people that were kind of the original cyberpunks. So again, when it comes to this issue, what we're seeing is that crypto is not belonging to either party. Crypto is something that the people are asking for more and more, and industry is asking for more and more. And it's kind of a bit of an arms race or competitive marketplace, if you will, to see which political party is going to cater to their interests more. And what we're largely seeing with regards to the article is that the Winklevoss twins, my gosh, are putting $21 million into a PAC supporting who they believe are going to be pro-crypto candidates on the right. So we're just trying to see where the trends are going. This is where I see the trend is going. I think that under the Trump administration, they've really been pushing for pro-crypto regulation, which is fantastic to see. Under the Biden administration, we saw kind of the opposite, especially when you throw Gary Gensler at the helm there and he does what he does. But thankfully, that's all in the past now, and we only have PTSD about it instead of those people actually running it. So overall, I'm excited to see where this stuff goes. It's elections are always kind of crazy. You never really know what's going to happen, and there's a lot of possibilities. So, if you're interested in this stuff, I would highly recommend to get involved with your local primaries so that you actually have control over which candidates you want to see supporting you. Most states, if you want to be involved in your primary election, you do have to register with one of the parties because that's where they kind of go through. Do I wish we had a better system in the US? Yes, I do. But this is the one we got, so we got to work with what we got. So push the football 1 yard at a time up the field, and it starts with your primaries. If you get the person you want in the primaries, odds are you're going to see that person represent you in the general election and then hopefully actually make it into the seat that is being contested. So again, if you're kind of the mindset that you've never really liked any candidates that get put up for the general election, well, the primaries are how you get into it. Also, how you can contribute to the primaries is you can donate yourself to the election campaign contributions, or you can try to talk to some larger powers that have a little more money to throw around, such as maybe one of the super PACs. All right, there you go. Political rant is over.
Go for it, slightly more black-pilled or cynical take on it, and I think that the first thing that people should do is take a really realistic look at yourself and understand the leverage that you can have on this political system, how fast the political system can change, and what your personal ability is to affect it. I think that it's very important for people to understand, like if I'm a worker at McDonald's, I can't change the price of the burger, right? I can't change the price of the stock. I can't determine where the next McDonald's is going to be placed and located. Like my job is to make the sandwiches, and that's all that I can do. The only time that I can decide like what the price is or where the next McDonald's is going to go is when I'm able to have enough money and have enough leverage and have enough power to have more influence on those things. So like just understand that this is a big game full of large players, and like if you're listening to this podcast, odds are you're probably not one of those players. So do the most that you can within your power limit to get the outcome that you wish to desire, or so that you could sleep safe at night, or whatever the heck. But also understand that like until you increase your power level, your ability to affect change is probably going to reflect whatever your current power level is. So eat the I would say eat the humble pie. If you're not eating humble pie, then like excellent, congratulations. I'm happy that you have enough money to affect political outcome. But odds are, if you're hanging out with us, you might be in the same boat as us. I don't know. I'm kind of probably projecting here, but that's my take is like do the things that you can do within your power that will get you the best results possible. And I personally think that focusing on economic prowess and focusing on increasing your own personal power will net you way better dividends than trying to focus on political stuff. Like we could be happy when the campfire stories are told and we get the results that we like. I think that that's super appropriate. But I think that as far as like focusing on politics goes, you'll probably get better results focusing on your own economic input and output first. Like the Winklevoss twins can throw around $21 million because they've earned it and they've done the work and now they're where they're at and now they can affect political change. So if you want to affect political change in your own way, like Zenith said, start local, work in the thing that's closest to home that you can have the most direct effect on, and go upwards from there. I'm not telling anybody that like your aspirations are correct or incorrect. I just think that a lot of people have delusions of grandeur and efficacy when it comes to politics, when it's like it's like the whole I'm playing my part or I'm doing my part kind of thing. It's like, yes, do your parts, but I don't know. I personally think that focusing your power where your power can make the biggest difference will get you the best results. That's my cynical 2 cents, and
I mean,
just
it's a very realistic
little
2
cherry on
cents
top
there.
I would like to add.
Well said. Well said.
Yeah. Thanks, bro. And I see you got a screen share pulled up. Is this a good seamless transition to the next topic?
Yes, it is. I know I just apologize for finishing up the political talk there, but
All right,
final
sweet.
article that we do have for you tonight before we do have some meme coins pulled up at the end, some altcoins as well that we want to take a look at, is an update for you, if you will. U.S. Senator Cynthia Lummis, the crypto market structure bill will be law by 2026. Wyoming lawmakers, one of the Republicans taking the lead to pass market structure inside of the United States Senate, leading the charge in support of legislation for digital asset market structure, has said a bill will end up on the president's desk before the end of the year. Specific date? Well, at least they're telling you December 31st there. Speaking at the Wyoming Blockchain Symposium in Jackson Hole on Wednesday, Cynthia Loomis said the Republicans' goal is to have a market structure bill passed through the Senate Banking Committee by the end of September, following the consideration in the Senate Agriculture Committee in October. Both committees will address how the U.S. financial regulators, the SEC and CFTC, handle digital assets. We will have market structure to the president's desk before the end of the year, she said. I hope it's before Thanksgiving. Republicans plan to pass the market structure in the Senate following the U.S. House approving the Digital Asset Market Clarity Act in July. Republicans suggesting their version of legislation, tentatively titled the Responsible Financial Innovation Act, would build on the Clarity Act. So, small explanation here. If you remember, during Crypto Week, we covered that we had a few different acts that were going through the House, and then the Genius Act actually went to the Senate, got voted on before it went to the desk of the president. The way that it works, bills originate in the House, they are then voted on there before they move to the Senate, and then the Senate has the ability to adjust bills, but before it goes to the president, they do have to reconvene and make sure that the bills match up before it goes to the president. So, Genius Act went all the way to the top, saw the president's signature, is now law. The Clarity Act, if you remember, that is the one that specifically talks about the roles of the SEC and the CFTC to affect crypto assets and their role in doing their regulation. So the Clarity Act did pass the House. That's done. What we're seeing here is that this article is just giving an update from Cynthia Loomis saying that, yes, the Senate is working on their own version of the bill, and if it's passed there, it will have to be melded into the original Clarity Act before it can be signed by the president. And the timeline we're getting is hopefully by Thanksgiving, but in a little worst case is probably by the end of 2026. To be honest with you, as I mentioned in the last one, once we get into the year 2026, odds are we're probably not going to see a lot of legislation because we're going to see a lot of re-election campaigns going on for the majority of the year. Mm-hmm. So I like this timeline because it's very realistic, which is that, yes, we did have Crypto Week early July. We did see some progress. We definitely saw progress on the Genius Act, which got passed, but the Clarity Act and the Anti-Surveillance CBDC Act, those ones have not been passed fully through all the requisite channels of Congress and legislation. But what we're getting here, like I said, it's an update. So I think it's good news.
Yeah, midterm years are not good years to get legislation passed through. Right, so I like this timeline. Hopefully it happens before recess because nothing happens during recess.
Very true.
Yeah, it's like midterm year, recess. It's like, bro. Yeah, kind of sucks for crypto if we're trying to get legislation through. But I like this timeline. And I like that Senator Lummis, one of her primary goals has always been on the crypto side. So I like that very much. There's going to be some cool things happening in 2026. You're going to get a new Fed chair. New Fed chair. He's probably going to cut a lot more than Powell. Let's be honest here. We'll see. We'll see what effect that has on the market. What do you think about this? There's a lot of discussion now going about stagflation. Z, what's your take on that? Is that just a bunch of fear mongering? What are the chances that we actually enter a period of stagflation here for the United States, especially considering we had a good GDP print Q2?
Yeah, so I guess some background information for the folks at home. Stagflation is where you get the worst of both worlds when it comes to economics. You have rising unemployment and rising inflation. In pretty normal times, they're actually kind of inverse of each other, which is that if you have high inflation, it typically means that your business cycle is running too hot. And that usually also means that there's a lot of employment going on, which is good news from employment, but bad news from inflation. Other way around is that in order to curb inflation, we saw what we saw back in like 2023, 2024, which is increasing interest rates, making it harder to do business. So hopefully inflation goes down. But also unemployment also unfortunately goes up. Stagflation is something we saw back in the 1970s, 1980s, and in particular, the UK got hit really, really hard by this. The reason it is such a boogeyman is that it is one of the hardest things to actually get out of once it starts going on, because you simultaneously have rising unemployment and rising inflation. The Federal Reserve is trying to maintain full employment and stable prices, and their controls really try to focus on one at a time. Makes it very, very difficult to control both. The reason that this conversation has come up is that it's particularly in the last month, we saw what could potentially be the start of a very unnerving trend, which is that we saw inflation go up, a little bit. Didn't spike or anything, but it did tick up. Notably, the producer price index was the one that went up about 1% for the month and 3.3% for the year. Core inflation, the consumer inflation was about 2.7%. It's pretty in line with the trend that we saw, but it is higher than that 2% goal, which we'd like to see. The other half of the story is where we talk about the jobs reports that we've been talking about for a while there, showing that there could be risk to the unemployment market. So, is this the first potential indicator that stagflation is a possibility? Yeah, it's possible. But at the same time, though, I think that you would have to really find yourself in a bad place to get something like that. And I don't think we're there yet. I think there are larger issues that are going to be affecting us. I know this is me getting back up on the soapbox here a little bit, but I personally think that just the underlying issue with the US dollar as a fiat currency and the way that we spend money, this is the government that has spent the most money and racked up the most debt the human history has ever seen. So I personally think that is going to have a little bit of a larger effect than necessarily stagflation. But at the same time, though, it is a real possibility. I think it's a very low probability, but it's possible.
Well, isn't it like that every administration? It's always, oh, we're now making the most amount of debt. Like that's a pretty standard. That's a pretty standard.
To the right.
Yeah, it just goes up
standard.
Into the right.
Yeah, it would be standard starting in about the 1980s. If you want a good reference point on this one, Will, you and I covered The Great Wave by David Hackett Fisher. He was a historian that gathered all of his underlings at the college, and he said, cool, we're going to go study price history for as long of human history as we possibly can. So they took it all the way back to pre-1200s, and then what they identified is that there were times of no price inflation, unnoticed price inflation, noticed price inflation, hyperinflation, crisis, and then deflation before the stable times again. One of the things that he really highlights in that book is that if you follow the waves, as he calls them, not cycles, but waves, is that the most recent one that we're on, which he argues starts at about year 1900, and World War II was actually a continuation of the wave instead of a reset, is that the crazy thing is the book was also written in the late early 1990s, mid 1990s. So they were talking about the 1980s is like, we've spent so much money. This is crazy. We've never spent this much money before. What's going to happen? And they're like, oh no, we're 1.7 trillion in debt now. As we sit here in the year of our Lord 2025 at $37 trillion on the national debt. It's like, yeah, did we see a change in things going on? Yeah, we did. Has it continued ever since it originally started? Yes. Is there any signs of it stopping? Unfortunately, I think the answer is no, which leads me to believe that we're probably going to deal with a sovereign debt crisis before we see hyperinflation again. Or who knows, maybe we get the worst of both worlds and hyperinflation is the thing that drives us to the crisis point for that one. And we finally see a correction to the fiat currency or something like that. Or even crazy enough, a changing in the world reserve currency. But that one is even probably a stretch farther than that. And by the way, the timeline I'm talking about here is like 20, 25 years plus. Like, I'm not saying tomorrow everything's going to crap. I'm saying, like, at some point this century, it's going to get dealt with.
Well, there you guys go. You might be dead. You might be alive. Sometime this century,
possible.
Right?
Yeah.
Hey, but before we start thinking about this century, we got Paul Sachs here who has joined us. He says, anybody need hands kissed or baby shook tonight? I'm here all fucking weekend, bro. I inserted the swear word in there. He's here all weekend. Good to see you, Paul Sachs. Glad we can have you. We also got Frank White. He says, bang, bang, DGen gang. And we've also been joined by our favorite Farmer J, West Up DGens. Good to see you, Farmer J. Glad that you could you'd join us. I always like seeing Farmer J. Howdy ho, good sir.
I will say, I think he's probably one of the few people, the few sports ball fans that are out there being entertained right now, because we are in the dead season, and the only thing on TV right now is summer baseball. So hopefully his Dodgers are doing well. Don't know much if they're a good team or not, but at least they're not the Seattle Mariners or the Colorado Rockies, both of which.
My poor sea chickens.
Yeah. Regardless, good to see you guys. Thanks for showing up. If you have any more questions, please drop them below. We'll try to answer them before we close out here.
Absolutely. You were saying though about the stuff happening sometime potentially in this century. Was that the end of your thought, or did you have a further thinking there?
Nope, that's pretty much the end of it, unless we go through another 2-hour book club talking about the history of money and inflation, but that's not for today.
How tempting. How tempting.
Very tempting. I don't know. I'll say this. This is going to be a very interesting century. There's been a lot of historical models that have predicted some sort of crises in the mid to late 2020s. And guess where we're at? We're right at the mid 2020s. So whether or not they're going to be right or wrong, only history will tell. And we won't know until we get through it on the other side and are able to identify it. Similar to how you know that you're in a recession is once you get 2 quarters of negative GDP growth. You don't know it in the first one, but you know it after the second one.
Mm-hmm.
Well, there you go.
All right, Mr.
I
Just
got
Live has a question here for us.
Ooh, okie doke. Mr. Just Live. Oh, I see it. Zenith, is Internet Money Wallet going to have issues with this KYC thing? That'd be a good question for Brother KG.
That would be a very good question for Brother KG. We'll shoot him a message afterwards and ask about it. So, if you don't mind elaborating a little bit on what the KYC thing is, because that could be multiple factors. It's either KYC inside the United States, or also right now, the UK, I believe, just passed an Internet Safety Act where they're requiring everyone to effectively submit government identification to some source in order to get online. It started out as a we're doing it to protect the children thing, but it is very, very quickly devolving just straight up into a censorship thing. So
yeah, this is 1984 all over again. They always start with oh, we got to protect the kids, we gotta save you, and it's like anytime you would sacrifice your freedoms for security, you will end up with neither. I'm pretty sure this Benjamin, you deserve neither and end up with none.
those who trade freedom for security deserve neither and end up with neither as well.
Yeah, exactly. And it's like, the UK, like, man, that government is there's something else. There must be like a test bed or something for like policies going to be implemented to the rest of the West. But yeah, those what they're doing over there is just absolutely ridiculous. And I'm gonna shout out 4chan real quick because they're just like, yeah, no, we're not doing that. Y'all can go piss upwind into a bucket. So I love me some 4chan.
Right up Main
Putting
Street.
Putting some of the Queen's English on that one, Will. I like it.
Mm-hmm.
All right, Just Live has
he
commented. He says, any coins that touch a no KYC wallet. Didn't read the specifics. All right. I apologize. We are going to be spitballing a little bit on this one, but I believe what you're referring to is that it's sort of the tracking thing, which is that inside the United States, there's a possibility that they're going to require people to KYC wallets. So if you have tokens that go to a non-KYC wallet, almost might be akin to you using a good old Tornado Cash back when it was at the top of the watch list. There's a possibility that thing could happen. I think that is a large ask. I think that people that truly understand the crypto industry and the space are going to see that trying to, if you set the regulation that no tokens can touch a KYC wallet, and if they do, they become tainted at that point. That is such a tremendous barrier that you are effectively just pretty much going to start calling, like, I wouldn't be surprised if it got as high as like 10, 20, maybe even 50% of like the crypto out there that actually moves around has touched a non KYC wallet at some point. So if that kind of regulation gets passed, that would be a huge issue. So for our friends over at Internet Money, like Brother KG and the team over there, yeah, it'd be a bit of an issue because theoretically that might be opening themselves up to some lawsuits and regulators going after them for creating a product that allows them to skirt KYC law. At the same time, though, those are sharp dudes. Those are, as the Bostons say, they're wicked smart. So I have full faith in those guys being able to to navigate the legal space and ensure that their product remains viable for people. So look, that's a bit of a dystopian nightmare future that you're proposing there when it comes to everything has to be KYC, including your own hot and cold wallets. That fundamentally goes against some of the principles of DeFi and crypto in general. So to get a push that far, I'm not saying that would be a point where like the entire space is lost, but it's an indicator that it's going that direction. Yeah.
I think if it gets that far, man, like, get the hell out of whatever country you're in that's doing that stuff, man. And if it's happening in the States, like, I'm not suggesting that people break laws, but
no.
I think that it is, our country was founded on the breaking of laws. So it is almost the most American thing that you can do to resist tyranny. And I'm not condoning doing bad things, but I am saying that sometimes good people got to do things that the government doesn't
Yeah.
like. And sometimes the government tells people to do bad things, and sometimes the government does bad things. Look at Operation Paperclip. Look at Ruby Ridge. Look at Fast and Furious. Like I could go on and on and on. And I apologize if I've accidentally flagged our YouTube account. So now we're all on some Palantir watch list or something like that. But
Oh no.
like the government does bad things, and it is your job to resist bad things and also change them for the better. So if this bad thing happens, the first thing that I would do is I would vote with my feet and I would get out of there. I would exercise the right to freedom of movement, and I would move myself on out of there with wheels or wings or shoes, whatever. That's my 2 cents. And if that's not an option, then fight or flight, baby. So
It's definitely one way to look at it.
not financial advice, everybody. Don't listen to me. I'm just an asshole on the internet talking about my feelings.
Hey, follow the laws, pay your taxes. It sucks, but
Yeah.
it is
Wink,
what it
wink.
is. Life outside of prison's a hell of a lot better in it.
Yeah.
Alrighty. I do have one final thing. We did talk about Hex Week and the Pulse Chain Conference, so we would be remiss not to pull up our favorite website. GoPulse.com, baby. All right, let's see what we're looking at here. Well, overall, it's not looking great, but it's not looking terrible either. So let's take a peek.
I would say it's looking not very good. That's
7
just my
days. Well, we'll take it with some context, a grain of salt here, if you will.
Fair.
Over the last 7 days, Pulse Chain down about 5%, Pulse X down about 7%, Incentive Token 6%, Hex 13%. A little more context. Let's go out 30 days. 30 days, we see some green here. All right, Pulse Chain is up 36%, Pulse X 34%, Incentive Token 3%, and Hex 17%. Fair enough. Let's look at the charts, shall we? So, if you remember what we've been seeing lately, all of the Richard Heart ecosystem has actually been doing a pretty good move to the upside over pretty much the last month. And if you look at the charts, we're seeing pretty much the same thing. But what we're seeing in that 24-hour and the 7-day numbers there when it comes to the percentage changes is that we've entered a bit of a consolidation zone, which is that Pulse Chain got up to about that 55 and then as low as that 48 level, although we did have our initial peak here at 53 and then a swing low at 39. So consolidating right around this same area that we spent a good chunk of time back in December through February, and we spent some time in November as well. If we flip over to PulseX, I imagine it's probably going to be similar. Yep, look at that consolidation range. We're near previous peak back in May, and we actually are slightly higher than our older accumulation zones. So let's throw it in logarithmic. There we go. All right, so overall, it's not looking terrible. This is going to be a determinant to see what we do from this current position. Whether we pump up, pump down, follow Ethereum, do our own thing, that's going to be yet to be determined. One of the big news events that came out during the Pulse Chain Conference and Hex Week was that there was over $2 million that got bridged in stables into the Pulse Chain ecosystem. I know a lot of people have been watching to see if that gets deployed or not. I don't have a full update on the situation, but we have been seeing an injection of capital. Let's flip over to Incentive Token, our favorite meme token.
Speak for yourself.
What?
Mine starts with a P and ends with an Ngu.
That's true. We'll take a look at that one as well. I also have another one that may or may not be buying me a graphics card here shortly after I fried my last one. Yeah. Hex, let's see how you're doing. This was one of the breakouts. We had a really good pump here off the bottom back in mid to late July. And then again, we're entering that consolidation zone, throw it in logarithmic. And I think we're at a critical point for Hex. This is something we've talked about in the past, which is that I think if we can flip this 1 cent level into a solid support line instead of a resistance, I think that'll be fantastic. And it'll be a good base of support to start moving up from there. So when it comes to Hex.
Yeah,
Hex
kind of hold 1 cent, man. Like if you want the strength to have any hope of surviving, we have to hold 1 cent. Right? We have to hold that range low. Have to.
Very true. I mean, to take this also with what we talked about at the beginning of the show, which is potential new 60-day cycle. I think it's largely confirmed unless we get another blip down. If we did get another continuation to the downside on the 60-day cycle to make a new cycle low a little bit past day 63, it wouldn't be the craziest thing in the world. We had a high on day 53, which is pretty right translated, meaning that realistically, you could see this cycle run all the way out to 75 days, maybe even a hair or two longer than that.
Yep.
So if we did get something like that, do I believe that these assets would drop down to maybe another support level below it? Yeah, there's a high probability of it. I do think that the other difference this time compared to other 60-day cycles is that Ethereum is holding up really, really well. Because Ethereum is pumping, Pulse Chain, obviously, the fork of Ethereum. And as we've seen largely is that Pulse Chain kind of follows Ethereum. So if Ethereum can hold up well, that should give you an argument that Pulse Chain should hold up a little bit better as well. And then additionally, if we really get to an altcoin season, then yeah, this is where our favorite altcoins right here, the Richard Heart ecosystem, Pulse Chain, all those good things, those are the ones that could potentially really benefit from that. Speaking of altcoins, Jay, I hear you might be a fan of something.
Oh, Pudgies?
Yeah.
Yeah, just a bit.
All right.
Luca teased a few things. He teased a potential Nintendo Switch game coming out Q4. I don't know, whatever the new Nintendo system is. So, I don't think I have to pitch Pengu too much. I've already pitched it enough in our Telegram, did enough streams on it. But Luca and Igloo are a Q4 company. So everything big that's going to be happening, he's probably going to unload that clip in Q4.
There you go.
Yep.
As
Happy
far as the
Meal,
price-
movie, game, probably all coming out Q4.
That's true. And by the way, Jay, you've been doing some fantastic technical analysis when it comes to this coin, in particular the Elliott wave theory stuff. And that, by the way, is inside of the Telegram. So if you want access to that, you got to check it out there, by the way. But interesting thing for Pengu is that it actually was one of those runners that on Friday had a really good green candle there when Jerome Powell was talking about potential change in the Fed rates. And Pengu did have a bit of a top there for a local at about 4.3 cents, got all the way down to 2.8 cents, now sitting at about 3.4, which is just a hair below the initial all-time high when it originally came out there. So only about, like 9 months old at this point, so relatively new, but it is like all you've been focusing on. This is tied into a lot of other stuff, which is that there's the Pudgy Penguin, the plushies, the IRL plushies that are tied into the NFTs, which is also related to the IP, which is related to the Pengu token, which is related to all the other IP stuff they're going to be putting out. So I'm not going to lie, there's some pretty bullish stuff here. Again, nothing here is financial advice. This is definitely on the lower cap of things. We're looking at $2.13 billion market cap. So it's definitely higher than a lot of your favorite random coin 5,291. But at the same time, it's no Ethereum, it's no Cardano, it's not even an XRP. But very interesting project to watch out for. All right, time to talk about my personal little winner. Nobody Sausage. This is a meme coin with some IP behind it. And one of the cool things is that it recently did a 2x. So we got out of bed, we hit the 2x, took a little bit of profits. And overall, this is shout out to the Moon Gang. Miguel, Dollar Cost Crypto, he was the one that put me onto this one. Let me know what's going on. Explain the history of the IP. The guy that created the Nobody Sausage memes. He likes the token, gave him permission to run with it. So it is a meme coin with an IP actually, which is cool to see. And it's at all-time highs right now, and it's not super old. Launched originally back in May, so you get a market cap of 74 million. So again, very, very small. But these are the kind of plays that really should be no larger than a scratcher bet. But again, not financial advice. Do with that what you will.
Speaking of not financial advice, we've been joined by a DGen Roundtable and Walk the Block member, Mr. Dace Northall. What is up, amigo? Good to see you. Welcome to the show.
Hello, guys. Sorry to be late in coming. I had a long Sunday's a busy work day for me, and then I did the gym. I had a lot of housework and ate some dinner, and saw you guys were still on. Fired it up, and I was like, wait, I can just be on that instead of just watching it. So here I am.
Hey, welcome.
True. Dace, are there any projects that you've been watching lately that are making some moves or have some possibilities?
You know, I actually on Pulse Chain, there's a couple of very interesting new high risk. Wouldn't mention these on Walk the Block. These are for DGen Roundtable specifically, with good reason. But
like
yeah,
I segmented it out.
Yeah, no doubt. This is your disclaimer. But yeah, a couple of interesting lower cap coins on Pulse Chain with some interesting projects behind them. Zen, Z-E-N, not X-E-N, is a interesting one to check out. Also, ZK Pulse, very controversial one. There's a coin backed by, or a coin that is affiliated with a third-party project on Pulse Chain right now. Quite the rabbit hole to go down. Me and Mr. Will Stevenson were messaging about this project, I think yesterday even. So what else? There was another one I picked up the other day, just a little scratcher. Zero. Peacock obviously is moving a lot. Peacock is affiliated with LibertySwap.finance. It's done quite well here recently. So yeah, there's quite a few interesting low cap, the trenches, right? The trenches are what's getting pushed on Pulse Chain right now with the advent of Liberty Swap Finance. A lot of the marketing push around that team has really focused on pump.tires and also on just, lower cap, self-generated, the Liberty Swap Finance encourages people to use pump.tires and start their own coin or otherwise start their own coin. And yeah, I think the goal is to attract the Solana user base with that philosophy and that mindset. And to sort of shake hands with that, they've recently launched a bridge direct from Solana to Pulse Chain, which is some interesting tech that opened yesterday. And so, yeah, there's interesting stuff happening on Pulse Chain right now, for sure. A few different areas.
Liberty Swap is doing a very, very good job on social media, in particular X, with just putting out a lot of content, some good memes if you're into that. But honestly, it's just good marketing. That's really what it is. It's just getting people out, just getting their name out there, making sure that they're visible in the space. And then the product itself, it looks fantastic. Haven't personally used it, but I've heard nothing but good things about it. So
I have used it. I know it lacks some of the fundamental documentation that some of your more strict or, more hesitant folks are still looking for before they touch it. But I know that it's been quite adopted by a lot of folks. And like I said, I've used it. I've sent some onboards to it. I've had zero issues. The cross-chain swap tech is something that is really interesting. And also because it's a bit of a black box, it's a really curious project. They it's only one way, so you can't send anything out from Pulse Chain through it. And it's only accepts USDC, but across multiple different chains. So very interesting project.
interesting. Bridging to Solana seems like a very big possibility, especially if it's one way. Because what we've seen largely on Solana this cycle is that it's been the place to go for meme coins and stuff. There is the possibility of having meme coins on Pulse Chain as well, especially through the Pump.Tires application like you just talked about. And if anything, I'd argue that the Pump.Tires application might be a little more beneficial for the underlying ecosystem, especially since Pump.Tires burns Pulse Chain when new tokens are minted and traded, which fantastic new buy and brood feature for the coin of the realm, if you will, to channel some triplet data or good buddy there. So overall, the way I see it, more bridges is better.
Agreed. And like you said, I think it's interesting timing with the mailers. The mailers have landed and they're printing labels for them is the latest from Richard's feed. And so, yeah, lots of interesting happening timing wise, lots of interesting things happening, whether it's rate cuts or some of these interesting Pulse Chain publications and marketing maneuvers. Pingu obviously making big moves right now too in the marketing space and trying to branch out into getting fresh eyeballs. That's the game.
That's true. Speaking of Richard Hart, guess what he actually just tweeted about? Well, I got a screen share for you.
Oh, okay.
Something nice.
It was yesterday. Look at that.
Okay.
Bridge to Solana to Pulse Chain. Liberty Swap Finance.
Very nice.
There you go. Getting attention to the big man himself.
Nice.
Thank you, Richard Hart, for all of this.
You got even a bridge to Binance. You got some to Binance Smart Chain, Arbitrum, Ethereum, and then Solana. Yeah, man, you need bridges. You need to build bridges, right? Shake hands across the aisle, and build community. Build the Pulse Chain community outside of the Pulse Chain community.
Most definitely. I think there's room for some good crossover between the Pump.Fund and Pump.Tires folks. We talked about it last week on our mini cast where we broke down why we think that meme coins on Pulse Chain are not exactly as primed as the ones on Solana, but we know that the money's on Solana. So if you open up the gateway, like Liberty Finance did, for Solana to get money into Pulse Chain for the similar purpose, that opens up an avenue where you could have similar meme coin trading going on Pulse Chain that you would on Solana. By no means would it eclipse Solana. Probably wouldn't even get up to about 10% if we're being honest here, but it's not nothing.
I could have swore.
Trying to find this.
Never mind.
Richard Hart tweet.
Yeah. I thought there was a Telegram message that I had found, but I'm don't worry about it. I was gonna veer off somewhere else. I do think that it's interesting that it's only one way, and I think that that's kind of fun. I wonder if, like, where Liberty Swap got all of these assets, because I think that what happens is they front load the transaction, and then they do the bridging on the back end themselves, right? Is that am I just speaking out of my ass here?
No, that's what I presume as well. Yeah, and the idea is for it to be, one click, right? The Solana folks are used to quick and one click and simple, and this UI allows you to get into Pulse Chain as quickly and as simply as possible, right? The bridge takes 20, 30 minutes. It's not fun. And so you can always still bridge out if you come over from Solana and then make your fortune. You just got to wait your 20 minutes.
Yeah, we do like that.
It's true.
I
will say it's hard to admit this one a little bit, but Solana is technically faster than Pulse Chain when it comes to processing transactions.
Oh, for sure.
At the same time,
100%.
it's Pulse Chain is about 3 seconds, Solana sub 1 second. So is it slower? Yes. Are we talking Bitcoin confirmation times? Absolutely not.
Yeah, it's a bit akin to, like, I don't know what the analogy would be. Let's say a Corolla and like two economy cars arguing over who's got the best top speed. It's like there's just not a functional difference, value difference. I guess unless you're doing super high volume, right? Like if you're running a ton of bots, right? Or if you're running a ton of wash trading back and forth through some chain, it opens the doors to lots of really creative high volume plays, which doesn't appeal to me personally. But other than that, yeah, not a whole lot of difference.
Yeah, I don't think much of us here are in the position to be making high volume transactions by any means.
I would say that that's fair.
All right. True. Alrighty, Dace, what else you got for us? We need one more before we close out tonight. Something.
Let's see. Well, I've been messaging with a lot of my Pulse Chain folks, and so there's a constant debate, Hex versus PDI, and sort of the different camps and parties and opinions, and an interesting concept that somebody pitched. I like to listen to other people's opinions. I hold a lot more Hex than PDI personally, and so somebody came on, talking about the concept of an L2 that would have collateral, and that way you can effectively execute what DeFi was built for, which is locking up your value and selling it, or taking a loan against it instead of selling it to try to reduce and manipulate, sell pressure, and if anybody's good at supply manipulation, it's Richard Hart. And so I thought that was an interesting idea. And I haven't think I've spoken to Zenith or Jay about that. So very similar to what using the Arbitrum or Optimism forks as a lending platform with a variable rate. So, Richard could say, hey, don't sell your Hex. I'll pay you a premium for it if you don't sell it. Come lock it up here instead. Be very interesting. Something I hadn't heard before. And the PDI folks, it's what I understand to be some of their latest narrative. And so I always like to give the devil their due. Wanted to bring it up and see what you guys thought about it.
We've talked about the lending protocols before as well. I think, or what is it, Fame and Fiat are some of the early lending tools that we had over on Pulse Chain and Hex.
And of course, liquid loans are one of our biggest hits. Yeah.
Look, the protocols work. I think getting the user base to actually start leveraging these things to a degree it's kind of a big ask because I think it's a very unconventional method that they're not used to, but the possibilities for the upside is there. I think it's going to be a bit of a learning curve to people to figure it out and also truly understand what are the risks of doing so. Because there's only trade-offs with this stuff. There's no forever positive scenario. Again, when it comes to the markets, we don't really know which way it's going. We have forecasting tools so we can try to predict these things and base it off of historical trends and that kind of stuff. But at the end of the day, at any given second, we couldn't really tell you if it's going up or down in the next minute because that's just ridiculous. So understanding the pros, getting a user base to understand the pros and cons, and then also understanding how to properly use these things, I think it's probably going to take some time. But just the fact that it's there and an option and available, I think is a beneficial thing. There are going to be people that take advantage of it. And honestly, I think the people doing it right, those are going to be some of the biggest winners of the cycle.
Yeah, I agree. I think when you look at, if there's something that Richard's good at, it's taking something that's there and making it, improving it or putting his own stamp on it, modifying it in a way that he thinks is making it better, at least. Let's put it that way. It's probably something that he would say. I would venture to guess. Sorry, Richard, if you're listening, don't be mad. But yeah, I think, I think he understood the DeFi narrative early, and Hex did well. And I think if you look around at what's happening now, what would he synthesize now and try to do better? And like the NAV premium stuff going on, right? With the value generation of the shares as a result of the treasury holding the base asset, right? That's something that I could see him trying to potentially utilize with the ETH treasury. We're all expecting him to spin the treasury, and meanwhile, all these other companies are buying these treasuries up, and nobody's talking about them selling the treasuries. They're talking about them backing in for the value of the shares of the company. And so, why would Richard not do some DeFi version of the same? Interesting things to think about.
Yeah. I think that could be one of the potential answers to what is the Pulse Chain SAC funds going to go towards. Because I think that this is something we've talked about, which is that the idea that he's just going to kind of use it to pump the chain as a way to just be exit liquidity for the top doesn't make a whole lot of sense. But doing something like this actually, I think, kind of falls in line with the general sentiment of Hex, which is that the staking wants you to lock it up for 15 and a half years so that you don't just constantly sell tops and bottoms, but you actually accrue additional tokens over the long term through delayed gratification. So something like this, it makes sense, and it actually goes very much in line with stuff that he's talked about in the past. I think it was the Fresh and Fit cast that he did a few years ago. One of the things he talked about was explaining how the wealthy really utilize assets at both the top and the bottom to generate gains. And one of the methods was taking a loan on stuff instead of just eating capital gains tax or trying to earn money and then getting taxed on just normal work efforts.
Correct. If we don't think that, Richard is looking at tax law, just like he looks at crypto, I mean, what are we talking about here? And so I think it's also interesting. Look, I'm going to go ahead and go full tinfoil hat. Where's Hedron guy? Where's Alex? Right? What if they're working together on some encapsulation regarding the treasury, right? Those pieces could connect. We will see.
That is definitely an interesting proposition.
There is some new stuff going on with Alex with Hedron, and I can't remember for the life of me who tagged it, but I want to say it's called like Sigma or something.
That's right. It is called Sigma. Man. Yeah, something new coming up. So maybe they're not connected, but an encapsulation system like that, right? Where it's like, okay, I've done the right thing. I've locked up my hex. I want to get out. How do I not nuke the chart? Having a Richard branded solution that isn't go stick it on Power City or whatever, right? I mean, why would Richard not? He's already made his own DEX. He's made his own chain. He's made his own token. He would probably make his own lending platform too, I would imagine, along with, I know he's mentioned stable coins and wallets. And so if you could do a wallet, a lending platform, and a stable coin all in one move, my goodness gracious. So who knows? Who knows, man?
That would be something big, all right. Alrighty. Tell you what, Will, I think that probably about does it for the show. Can you lead us on taking it out?
I think so. There are no new chat shoutouts, ladies and germs. So thank you all for joining us. We appreciate y'all hanging out with us here. Before we go, let's go around the horn and tell the folks at home where we can be found and what we've got going on in the near future. Mr. Agent J, we will start with you. Where can the folks find you? What you got coming up?
You can find me always on Telegram. So go ahead and scan that QR code, jump into Telegram, and see what the community is about. I'm sure there's going to be something for you to find there, something for you to like or enjoy. So yeah, give us a holler and jump in there. And aside from that, social media stuff, I don't really spend a lot of time on social media except X. So I guess you could find me on X at _P90Hex, and that's about it. So thank you everybody for joining us on this wonderful Sunday evening. We know that time is your most valuable asset, so we do appreciate that you spend some of that time here with us. So until next time, like the damn video, comment, subscribe, scan the QR code, jump in there, and Dace, how about you, sir?
Yes, sir. You can often find me on stream with yourself. You can find me at DGen Roundtable on X and Instagram at Dace Northall.
Love it. Folks, you can find me,
Excellent.
Zenith, on X and Instagram over at Zenith DI. And then outside of that, we do have some excellent shows coming up for you here. Like Will has generously posted on our new graphic, we are streaming Wednesday, Friday, and Sunday live, 8 p.m. Eastern, every time. Will, do we have a confirmation for this Wednesday?
We do not have a confirmation, but I'm talking with Crispy Man, and so if he's able to join us, Mr. Crispy Man put together an excellent PDF document for things to talk about for new people joining the Pulse Chain space. So if these mailers are effective, then something for the folks at home to consider is like we're not going to be we would not be well suited talking to the people who are already here. We would be better well suited teaching the new guys what are the principles, what are the things we like, how do they get in, et cetera, why we're awesome, blah de da de da. So he's got an excellent PDF, and I just wanted to go through that with him. Other than that, we were chatting with Jonathan Navarro, and we haven't had anything confirmed yet, but he wanted to tell a story on our last Whiskey Wednesday that I did while I was up in Wyoming. And I didn't have the opportunity to invite him on. So perhaps Mr. Jonathan will join us. Again, no confirmation. Jonathan, if you're watching, you're more than welcome to hang out with us this upcoming Whiskey Wednesday, myself and Mr. Crispy Man, and whoever else wants to join as well, because Whiskey Wednesdays are for everybody. But if Crispy is able to join us, then I'm going to probably focus the first half of the show on the stuff that he has to say. And if not, then we'll just chill out and hang out. Whiskey Wednesday is open for everybody. That's the show that we do for you guys, just like the F and Hangout. And that's what we've got with that. So no solid confirmations, just some castings. We've thrown some lines out there, and there's potential for folks to join.
Cool. Outside of that, on Friday, we do have book club. This time it's going to be hosted by our very own Mr. Will Stevenson. We're going to be covering Alpha God, which is a book covering the history of psychology and specifically religion. And we are also going to be using that as a jumping point for analysis to see if there are any, particular people inside of the crypto space or tech space that are trying to purport themselves to a general audience using some religious psychology tactics. So we're going to be talking about that on Friday. And as always, next week, we're going to be back here for our flagship news show every Sunday. That's what we do at the DGen Roundtable. So we hope we see you guys again soon. But outside of that, Will, please take us out, sir.
All right. Excellent. And then I got to make sure that I post in here that none of the things that we talk about on this show is financial advice. And Zenith, I forgot to put your thing. Where can the folks find you?
Zenith, you can find me on Instagram and X at ZenithDI, or you can scan the QR code, get in the Telegram. You can hit me up with a tag in there. I believe my username is Zenith Crypto. So if you got a question, comment, funny meme, send it my way. Also, anime hot takes. I'll take those too.
Excellent. For the folks at home, if you guys are looking where you can find me, you can find all of my socials based off of the Pulse Chain domain Linktree thing, will.pls.fyi. That is where everything can be found. I did test it earlier, and it does work. So I know that there was some hiccups with that earlier, but the site does work now, so that's always good. That's what we've got going on Wednesday, Friday, Sunday. You guys already know. As you guys can read right below Dace Northall, it says that we are live every 8 p.m. Eastern, Wednesday, Friday, and Sunday. You guys can find us right here where you're watching us right now, whether you're on YouTube or Twitter. And with that being said, I want to thank you all for spending your valuable time with us here on the DGen Roundtable. As Agent J often says, we know that time is your most valuable asset, and we appreciate you investing it right here with us. Ladies and gentlemen, my name is Will Stevenson, but more importantly, you have been watching the DGen Roundtable. Mr. Producer, that's me. Go ahead and get that trigger finger ready, because it's time to remind all the folks at home to remember, aha, I've got camera for the last little bit, to DGen responsibly.